Welcome back to the Dividend Diplomats YouTube channel, everyone. Lanny, Bert, you know us by now. The Dividend Diplomats. Everybody, we purchased over $2,000 of stock during the week of April 18th, and this video is going to tell you all about the companies we bought and how much dividend income we added as a result of those purchases.
Guys, let's make some noise here. Smash that subscribe button. Give your boy Bert and Lanny a thumbs up on the video, as we are fully transparent with the dividend stocks we buy almost each and every week. We show you the proof in the pudding. We put the money where the mouth is. We are giving you the inside scoop on the stocks that we are placing in our financial freedom dividend stock portfolios.
That's right. This was a very interesting week in the stock market. Again, this video covers purchases from the week of Monday, April 18th through Friday, the 22nd. So keep that in mind as we're watching. We are in the heart of earnings season. You saw a lot of companies disclosing the impact that the higher interest rates, inflation are having on their current earnings and their future earnings guidance. From the market standpoint, it started out around 4,400. It was hanging tight, jumped up, and then at the last second started coming down towards the end of the week. The S&P 500 ended at 4271, down nearly 3% for the week.
S&P 500 is down. This is probably the most up and down / volatility I have seen in quite some time right now, because there's still so much happening. And it's hard just to kind of stay calm and keep investing, or stay calm and carry on. This is, what it's all about, though, for dividend investors, is capturing that value as much as possible while the market is volatile, because as you'll see in Bert's stock purchases and possibly in mine, we're grabbing good valued companies at lower prices and some at much lower dividend stock prices.
That's right. And for those that are new to our channel, we find these undervalued stock using our Dividend Diplomats dividend stock screener. I'll just list out the three metrics here quickly, and we'll link to the video above that explains the screener in greater detail. We look at the price to earnings ratio to make sure it's less than the S&P 500. Payout ratio to make sure it's less than 60%. We look at the history of increasing dividends, and then that bonus metric is the dividend yield. So that's how we find these undervalued stocks that we're purchasing. That's how we find these undervalued stocks that we are consistently purchasing.
Exactly, Bert. So, hey, do you want to kick things off? I know you have your consistent stock purchases, plus you've got a long laundry list.
Yeah, that one was fun because for the first time in a year, for this company, I was able to update that income added field for this company because they just announced a dividend increase that we covered in our last video before this one. The company Johnson & Johnson, ticker symbol JNJ. You know this by now. My wife and I each had one share of Johnson & Johnson every week, and we have been doing so for over the last year. It's been climbing recently, though. So Johnson & Johnson, we grabbed these shares at $178.54 for myself, and my wife grabbed one at $178.42. So right around the same. In total, we each added, this is exciting, with that dividend increase. I don't know, I can now say we added $9.04 of dividend income combined on that Monday from the purchase, and our yield was 2.53%.
Over the $9 before. You're always $8 and some change. There you go. That's what it's about.
Yeah, that's what's fun. So again, those are our consistent purchases that we do every week to start off. But I'm not the only dividend investor on this video that does a weekly investing strategy. In fact, you even do a +1 right here that you just talked about in our blog, Lanny. Why don't you tell us about your automated purchases to kick off the week?
I'll let them know. Cleveland, man, better luck next year. But all right, you're right, Bert. But because of how many you have, I'll probably jump into my second automatic strategy that I have going, probably after you do at least maybe two more. But guys, my wife and I, for the last, it feels like we're almost at the 2-year mark. Back in July 2020, this started. Vanguard, ticker symbol VYM, for their high dividend yield ETF. We each buy 2 shares each week. So we bought a total of 4 shares between my wife and I at a price point of $112.26. Doling out that capital, pretty much, I'll just say rounded, was $450. We added about $12.40 to our forward income at a yield of about 2.7. 6% and Vanguard high dividend yield. You better show me some good dividend results come Q2, baby.
Yeah, bring it in Q2. That's what we want to see. But congrats to you and your wife, Lanny, and just continuing to execute on this weekly purchase strategy for VYM.
So, Bert, I know you have a bunch of stocks here. Let's go through a couple more that you bought.
I'll do these next two together because I accidentally got roasted on Twitter for this purchase by the Twitterverse here, because apparently I did not realize come Good Friday that the stock market was closed when I put these orders in. So I thought that I had made these purchases on the Good Friday before, only to tweet out that I did it, not realizing the market was actually closed that day. I assumed it went through. I didn't check. So that was my bad for not checking and verifying before sending out that I made the purchases. But it didn't matter to me. I really didn't care because come Monday morning that trades were executed and I still grabbed the companies at the price I wanted. So come Monday, I executed trades, one share of Intel at 45.55, adding $1.46 of income from there. The yield was 3.21%. And then also I doubled my position in this company, Cummins, ticker symbol CMI, by grabbing one more share at 195.64, adding $5.80 to my forward income from Cummins. The yield was just a hair below 3%, though, at 2.96%. Regardless, I was pumped up to grab both of those companies at that price, especially Cummins. I'm excited to continue building my position in that company over the year. I want to get it at least to, I don't know, 8 shares at some point in the near future.
CMI stock has been falling. I know I've been buying them throughout this year. And Bert, it's funny, even after you bought it, they still finished off the week at $199. So congratulations on the purchase point.
Yeah, and they're still below 200. To your point, they're back below. It's still at a price point I like. So maybe this week I'll pick up one more share of them in one of the other companies that I started building a position in that I'll talk about a little bit later. So Lanny, here, you know what? You're driving down the lane right now. Let me just kick that pass to you here so you can talk about some of your next purchases from the week.
All right, guys. So, what I'll do is, since we'll stick with the Vanguard theme, because every day, if you haven't caught the recent blog post, I now also buy Vanguard's S&P 500 ETF, VOO. Bring on either the lovers or the haters in the comments. Like the video. Let's see what VOO investors we have out there. But I buy at least $50, and it's all set automatically on the app that I use to $50 every single business day that it's open. This one's a little interesting because obviously Good Friday was closed, so that 50 went in with Monday. So the Monday was actually $100 invested into VOO. And then once I saw the market was really sliding Friday, I threw in another 50. So in total, I dropped $350 into Vanguard's S&P 500 ETF VOO, added a whole 0.86514 shares at an average price of $404.56, added $4.80 to my forward income at about a 1.37% yield.
It still baffles me that there are so many haters out there for VOO because I can't figure out why someone would complain about a daily investing strategy in an index fund. Whatever, bring it. Just come prepared because Landy's not going to take this one lightly. So come ready to fight, I guess, if you're going to come after this strategy.
All is good. But man, Bert, I know you've got so many stocks to talk about here.
I don't know if I'd say so many, but I have two more. This next one should not be a surprise to anybody out there, especially the people that follow our channel and watch all of our videos. Last week, we talked about a dividend king that's showing signs of undervaluation in a sector that is very underrepresented in my portfolio. That's why it shouldn't be much of a surprise that we finally started building a position for Stanley Black & Decker, ticker symbol SWK. I built Cummins, started putting that one in my portfolio. So Stanley Black & Decker is going to be in my wife's portfolio there as we build out the family portfolio. I grabbed it when the market opened on 4/18 as well at 138.71. The yield not the highest, so this position added $3.16 of forward income. If the yield at that time of that purchase was 2.28%, fast forward to Friday when the stock market was falling, grabbed another share of Stanley Black & Decker at 144.30, Again, 316 of income added. This yield was 2.19% though. So you can see how much the price kind of climbed up after we started talking about that. In total with the two shares, we added $6.32 forward income, and I am pumped up to start this position.
Nice. And if your last price is 144, Bert, it looks like it's now trading under 142. So hopefully this upcoming week you can grab them at that price or lower.
Yeah, I caught it at the wrong time on Friday. I just added it in the morning, not knowing that the floor was going to fall out from the market at the end. But to your point, I'll just average down this week. It doesn't really matter to me.
There it is, guys. So nice job adding a dividend. Is a dividend king for Stanley?
Yeah, just more kings. Bring him in there.
Jeez.
They're gonna start calling me the Jerry Lawler of dividend investing here soon.
Yeah, right. Bert the King, dividend investor over there.
Yeah. So that's where, Lanny, do you want me to finish out my last purchase before we kick it back to you? Because this one was relatively small. I can just throw it in here at the end because yours, I want to. Yeah, let me do that because I want to spend a little more time talking about that last purchase there.
Let it rip.
On Friday, we just threw in 5 more shares to Provident Financial for my wife's position. Stock price was $22.83, so she added $114.13 from this position, $4.80 of dividend income at a yield of 4.21%. Had a little cash left over. We looked at her positions and saw which one do we want to build a little bit more in. Position's not fully loaded, so you know what? 5 more shares will help get it closer to that point. Not a large purchase, but you know what? I love it. I love banking, love community banks, so that's a great way to end the week.
A great way. I mean, obviously, I buy and own a lot of Provident Financial as well. Again, great community bank. Let's just see a dividend increase hopefully this year from PFS.
Yep. So Lanny, we are rounding third here. Let's talk about this last dividend stock purchase for the week between the two of us. Let them know, Lanny.
All right, here we go. Let's dive in. We're going down to Scott's Miracle-Gro, another dividend stock that was on my watch list. Ticker symbol is SMG. And guys, I bought 3 shares this week. And I just kept buying down about almost $4 plus lower on each time I was buying. So on Thursday, I bought 1 share at $112.88. And then later on, I grabbed another share at $108.09. And then on Friday, I grabbed 1 more share at $103.90, I believe was the price point there. So, in total, if you look at the 3 shares, spending about $325, adding about $7.92, I believe is the sum, at about a 2.5% yield overall. 3 more shares of Scott's Miracle-Gro.
I love this purchase, and I love that you've been adding shares to this company over the last several months. You've just been slowly building up your position.
Yeah, because it wasn't that large, but had a nice run up in stock price. Because guys, the 52-week high for this company, and again, pick your jaw up off the floor when I say it, is $248. So they're now trading at $104.16 as of the close on Friday.
Well below that 52-week high. Holy freaking cow. I was just going to say my favorite thing looking at this chart was just the yields of these purchases. That first purchase, 2.34% yield. Second one, 2.44% yield. That third purchase was at 2.54% yield. I love it. I think that's fantastic.
This yield is now settled above 2.5% for the week. So, I think it's a great dividend stock. Get that special dividend every few years, plus a nice consistently growing cash flow, passive income producing stock.
That's right. So here, I'll summarize my purchases here. In total, we added shares to Johnson & Johnson, Intel, Cummins, Stanley Black & Decker, and Provident Financial Services. The total, this is going to drive me nuts. I'm so mad at myself that I didn't cross into the 4-digit club here at a $995.29. Income added $27.42 at an average yield of 2.75%. I think that's fascinating. My yields have usually been above 3%, but looking at it, Stanley Black & Decker, Johnson & Johnson, both have lower yield. Yield doesn't matter. I'm just pumped up to add high quality dividend growth stocks and dividend income to my portfolio, regardless of what the yield is.
Yeah, and my yield's even lower, but I bought shares into Vanguard's VYM, Vanguard's S&P 500, VOO, and Scott's Miracle-Gro SMG. My wife and I, we've put out $1,123.91 at a $25.12 at an average yield of only 2.24%.
So in total, we added $2,119.20 on a cost basis and a dividend yield of $52.54. Nice job, Lanny and your wife. Excellent job. Let's keep the momentum going. Let's keep this moving forward. Everybody, come on. Let's reach financial freedom together.
Guys, so what dividend stocks did you buy this week? Share them in the comments below. If you like what stocks we're buying, let us know as well. Please provide your feedback. If you haven't already, definitely give this video a nice thumbs up. Subscribe to our channel. That was Bert and Lanny from the Dividend Diplomats, over and out.